Okay, peeps, welcome back. So today we're going to be talking about the Bitcoin bull market cycle top indicators, how to time the top. Let's get it. So the first thing I want to bring up here is that there's no perfect way to time the top, and these indicators are not going to work 100% of the time. Sometimes you may have to use them in confluence with one another to get a more efficient way of timing as close to the top as possible. The thing to understand is that every cycle is different. Even though crypto is on 4-year cycles, the tops and the bottoms always look different. They're never the same. I'll show you guys that in the chart, but basically these indicators work until they do not. So we will be adjusting our strategy going forward with time, and it would be a good idea for you guys to do so as well, not financial advice. So let's get into it. So which indicators are we going to be talking about today? This is going to be a two-part video, by the way. So we'll make a second video later because we have a lot of indicators to go over. And we will also do one for market cycle bottoms as well, but that's going to also be a two-video series separate from these. So the first indicator would be the Crypto Fear and Greed Index. So there's a Fear and Greed Index that we use for the stock markets, and then there's a Fear and Greed Index that we use for the crypto markets. They're two different Fear and Greed indexes, okay? We use this one exclusively for crypto. So you guys can see here is the link. So let's go ahead and get into it. So this is the Fear and Greed Index. Ideally, when this I don't know what you would call this, like this pointer thing here is a hand, I guess it would be called, is in massively in the green. That means that we're hitting the greed territory, and it might be a good idea to take profit. And likewise, when it's massively in the red, it could be considered a good time to buy, right? So here's your historical values. You get the now, yesterday, last week, and last month. Usually when these are all 80 plus, meaning that they're all heavily in the greed for an extended period of time, I would say for a couple of, like, probably 3-4 weeks, all the way up to maybe 3 to 6 months straight. That's a pretty good indication that a top might be forming and it's time to get out. But the more important thing here that we're going to look at is so this is basically the graph as to the different time frames in crypto's history, when it's the most bullish, when it's the most bearish, so on and so on. So for the cycle tops, we take a look between February 2019 and June 2019. We'll take a look at that on the chart here. So February 19, you guys can see we weren't really bullish per se. We were actually kind of at a market cycle bottom, but as we started to get closer to June, you can see that Bitcoin really started popping off. Another indication that this was going to start moving to the upside was you get a MACD golden cross down here, as you guys can see. Probably actually have to zoom out a little bit for you to be able to see this properly, but there's a MACD golden cross pretty much right about the time that the Fear and Greed Index started moving up. So that's a bullish confluence, and then you get your golden cross here on the EMAs. And that's a pretty good signal that Bitcoin's going to go higher. So if you'd got in here at the EMAs or even at the MACD cross, you'd be taking a look at potentially as much as a 3 to 4x on your money on Bitcoin. So it's pretty clear that in this instance, using this Fear and Greed Index chart graph by itself is not good enough. It's better to use it in confluence with the charts. So we'll take a look between August 2020 and basically, I would say probably about August 2020 and April 2021. We'll take a look at that 6-month time frame. We're August, April, my bad, 8-month time frame. So let's see here, August 2020. Make sure I actually got these dates right. August 2020 to April 2021. Okay. So as you guys can see here, August 20, not really doing much. Bitcoin did move up since the pandemic low. But as you guys can see here in April 2021, we were pretty much at the cycle peak here. As you can see, it had been kind of getting stopped at this $60,000 level for a long time. That's a pretty good indication to get out. But once again, you could use the fear and greed index with confluence. So basically, once the EMAs had their golden cross right here, pretty good indication to get in. You also had a MACD golden cross down here, which was also another good indication to get in. And this actually would have given you a much earlier entry point than the fear and greed index would have. But if you use them in confluence, it can be a powerful combination. So I would say just on the fear and greed index alone, anytime this thing is basically above a 70, 75, it might be a good idea, not financial advice, to start slowly selling off positions, like kind of averaging out of the market as it goes up, or DCAing out, basically like taking some money off the table, some skin out of the game, so to speak. Not like selling everything all at once, although you could do that, but you never really know when the top is going to be, so it's better just to take some skin out of the game, in my personal opinion, than to actually try to time the exact top, because nobody ever really truly knows when the top's going to be. So that's the fear and greed index. The next one that we're going to be taking a look at is the MACD on the weekly. So if we take a look at Bitcoin's overall history, we're actually going to go to the current time and move backwards in time here. So you guys can see that the MACD crossed basically in August of 2022. Now, that wasn't an exact bottom. It was a lag. The price action was kind of lagging a little bit. So you can see that the bottom here was actually at 15K. But yeah, so as you can see, more or less on the flip side, this is pretty accurate, right? So we get our death cross here, and as you guys can see, it popped up a little bit, but more or less it really hasn't gone back above this resistance zone here. Now, if we take a look at the MACD cross near the cycle top, you guys can see that it was a pretty good indicator to get out. Was it exact? No. You're basically about a week late from the top, more or less. But again, it gives you a pretty good indication. You're pretty close to getting out at the top. You could also use the death cross here. We'll talk about that later in a minute. So the next MACD death cross here was exactly at the top. As you guys can see, the very last red candle that we had before we started having major dumps was basically spot on with the MACD weekly time frame. Now, if we go back in time, we're going to go to basically all the major peaks here. So 2019, the peak was actually back down here, so the MACD was lagging a little bit, but you got out pretty close to the top with the MACD death cross here during August of 2019. Again, we had another MACD death cross in January of 2018, so we're a little off the highs here, but I mean, so it's not a perfect indicator, but it's pretty close to the top. I guess it could basically be said that once you started seeing lower candle closes here, that's a pretty good indication that the trend is going to reverse. So there is that cycle, and yeah, that's basically as far back as we're going to go on that. We're not going to go to previous cycles because we already have 2 cycles we're looking at right now. So there's that. The topping resistance zone is another one. So as you guys can see here, this previous support held or turned resistance has basically held as resistance for the entire bear market. The top here in 2021, basically what you're looking for is you want to see like a double top, or you want to see a bunch of weekly candles kind of pushing up into this area or whatever the resistance would be, but not necessarily breaking out of it. What do I mean by breaking out? Well, basically you have wick rejections here, which is these long lines. These are known as wicks. If you don't get a candle close into or above this area, that's generally a sign that the bears are more or less controlling this zone, and they're going to sell it off, and price is most likely not going to go higher. So the top here in 2021 was pretty obvious. We were sitting at 60,000 for several months, and then it dumped. And also very similar here, several weeks we were sitting kind of in this zone here, and then we dumped. And if we go back to 2019, it's not so obvious, but you get, basically a green to red formation here where the red engulfing candle is bigger than the green one. That's a bearish sign. And then we have lower closes here. So that's kind of an indication again for a top in 2017. And 2019 was a little bit more obvious. You can see we had like a bunch of closes here at this 11,800 level. That's also a pretty clear sign that the market might be getting ready to reverse. So that is the topping resistance zone. The EMAs is another good one. I would say the most effective way to use this to basically try to figure out where a top is if you get a red candle close below the EMAs on the weekly, like this one right here. As you guys can see, the price never went higher from there. That's a pretty good indication that we were going lower. We have this red candle close here, but it's really, really hard to see. But as you guys can see, we did not necessarily have a close below, but the candle was a still red engulfing candle, meaning it was bigger than this one. That's a bearish signal. That's a pretty good indication to get out. As you guys can see, we didn't go back above that price for quite some time until we had the second peak. Once again, if we go back even further, you have this red candle close here. We went back up to the open of the candle here, but we never exceeded higher than it. And in 2017, same thing. Once we get the close here, we went back up to the open of that particular candle, but we never went back above it. So that would be how to use the EMAs. Now, the last one that I'm going to talk about in this video, which I think is probably the most accurate one that we have for a top-end cycle in this video, is the monthly break of support. So this is the highest time frame we use, the monthly. Basically, what you're looking for is you want to look for the first large green engulfing candle, and then basically from that point, you draw a trend line out. You want to see this trend line hold. Now, the trend line may not necessarily be obvious until many months later, so you're going to have to keep an eye on this. But as you guys can see, it held this trend line from October 2020 until December 21. Once we got a red candle close below that trend line, game over. The markets were in a bear market at that point, or the Bitcoin was in a bear market, I mean. So same thing here. You get your green engulfing candle, a large candle up, and then we hold this trend line as support. Once we get a monthly close below that, game over, markets went lower. And of course, something very similar happened here in 2019. As you guys can see, we get a decent sized green candle here. This holds as a trend. Once it breaks the trend, it doesn't really go higher again until the next halving, or after the next halving, I should say. And so that would be the monthly time frame. Another price pattern I would say that we used to kind of help time the top on this thing was what's known as a rising wedge. So you guys can see here we have kind of more or less like a trend line. It's not drawn perfectly, of course. It's a bit off, but it's more or less accurate. You can see that it's touched this trend line multiple times. We kind of had a fake out down here to the support zone, but we also had a resistance. So it was holding support here, and we had a resistance line here. When these start to coil together and start to squeeze, meaning the price action gets smaller and smaller going into this rising wedge, it has a higher probability of breaking to the downside. Rising wedges are typically more bearish than they are bullish, and the opposite is true. When you get a falling wedge, it's typically more bullish than it is bearish. A falling wedge would typically break to the upside. So this was another indication that we were able to tell that the overall bull trend was over for this market cycle. So anyways, keep a lookout for part 2. Hope y'all enjoyed this content. Please like, comment, and subscribe, and we will see y'all later. Peace.